Okay, so we're diving right in, getting to the heart of all things crypto, blockchain, even a touch of AI today.
Sounds good to me.
We're looking at the big stories, the big changes, the things you really need to know from around March 26, 2025. Think of it like your personalized briefing on all the big shifts, the game-changing collaborations, the regulatory twists and turns, and the incredible potential of tokenization, all laid out in a way that actually makes sense.
Makes sense to me.
Cutting through the noise and giving you the insights you need.
Yeah, I like that.
So let's start by taking the pulse of the global cryptocurrency market. Right now, it's looking pretty strong overall, wouldn't you say?
It really is. There's definitely a sense of, well, maybe not quite euphoria, but definitely a feeling of optimism, I'd say.
Optimism, yeah. But what's driving this? What's behind this positive sentiment? Our sources point to a few interesting factors. One is, well, it seems like the market is responding to, or maybe anticipating, President Trump's policies. And then there's the FOMC, the Federal Open Market Committee. Their recent decisions seem to have provided a sense of stability.
Right. And we can't overlook the fact that inflation numbers actually dipped a little. First time in, what, 4 months? That's got to be contributing to the positive vibes.
Yeah, for sure. And even the mainstream media, they seem to be warming up to the idea that maybe, just maybe, some of these policies are having a positive impact.
Maybe, maybe. But here's the thing. There's a big but looming on the horizon.
Oh, yeah, the tariffs.
Exactly. April 2nd, those tariffs kick in. And that could be a real turning point. How those tariffs are portrayed, how they're spun in the mainstream media, that could have a huge impact on cryptocurrency prices. Upward pressure, downward pressure, who knows? It's a wild card, and it's something everyone needs to be watching very, very carefully.
Absolutely. So we've got a lot to unpack here. We're going to look at this really interesting partnership between Crypto.com and, of all things, President Trump's media company. Then we'll delve into BlackRock, the investment giant, and their move into the European crypto ETP market.
Can't forget about tokenization. Real-world asset tokenization is exploding right now.
It really is. And we've got some good news from Kentucky. On the regulatory front, they're taking a pretty forward-thinking approach. Plus, we'll head over to Dubai and Abu Dhabi. They're doing some really interesting things with blockchain and AI. Buckle up. It's going to be a wild ride.
I'm ready.
All right. Let's start with Crypto.com and Trump media. This is where things get really interesting, where the world of crypto collides with traditional media, even politics. Crypto.com has teamed up with Digital World Acquisition Corp., DMTG for short, which, as you know, is President Trump's media company.
Right, right. And what they're planning is, well, it's pretty ambitious. They're going to launch ETFs, exchange-traded funds, under this Truthfire platform, all tied in with Trump Media and Technology Group, that's TMTG, and their Truth Social platform.
So we're talking Trump, social media, and now crypto ETFs. It's like a Venn diagram of, well, some pretty powerful forces, wouldn't you say?
Definitely. And these aren't your run-of-the-mill ETFs either. They're laser-focused on digital assets and what our source calls USB industries. Now, that's a bit vague, but given the Trump media connection, it sounds like it could be something in the tech space, maybe media-focused.
Yeah, that makes sense. And Crypto.com, they're not just lending their name to this. They're going to be providing the custodian back-end services for these ETFs. So they're really in the thick of it.
They are. Initially, it seems like these ETFs are going to be featuring Bitcoin and Kronos. Now, for those who might not know, Kronos is the native token of the Kronos blockchain, and there's talk that they might expand, bring in more assets later on.
So it's like dipping their toes in the water, seeing how it goes, then potentially diving in headfirst.
Exactly. But here's the catch. These ETFs, they're not available globally just yet. They're still waiting for the green light from regulators. So big announcement, sure, but we'll have to see how the regulators react before they can really hit the ground running.
Yeah, regulatory hurdles are always a factor in this space. And speaking of TMTG, there's another piece of the puzzle here. They're apparently planning a significant investment, up to $250 million, with Charles Schwab. The goal, expanding their fintech capabilities.
Fintech, that's the buzzword these days. Financial technology. They're making some serious moves in that space, no doubt about it. And if anyone wants to dig deeper into this, the source for all this is Crypto.com's own LinkedIn post.
So we're seeing this convergence, right? Traditional finance, media, politics, all coming together in this crypto space. It's really fascinating to watch unfold.
It is, and it raises some interesting questions, like what does this mean for the future of, well, everything? Will we see more of these unlikely partnerships? Will crypto become even more mainstream? It's a lot to think about.
It is. Now let's shift gears and head over to Europe. BlackRock, the investment management giant, has just made a big splash in the European crypto ETP market. This could be a game changer, honestly.
It could be. They've launched a physically backed Bitcoin ETP, the iShares Bitcoin ETP, ticker symbol IBTC for those keeping score. This is a big deal. It's BlackRock, one of the biggest names in finance, throwing their weight behind Bitcoin, specifically in Europe.
And for investors, it's a relatively affordable way to get in on the action. The total expense ratio, the TER, starts at 0.15%. Now, that is set to go up to 0.25% later this year when a temporary waiver expires. But even then, it's still pretty competitive.
Yeah, not bad at all. But what's really significant here is BlackRock's reputation. They're known for their due diligence, their thoroughness. Their entry into this market, well, it sends a signal. It says, hey, Bitcoin is a legitimate asset class, and that could bring in a whole wave of new investors, especially institutional investors who might have been hesitant to dip their toes in the water before.
Makes sense. BlackRock getting involved, it kind of legitimizes the whole thing, at least in the eyes of some. And this news comes from Bloomberg, so it's a pretty reliable source.
Absolutely. So we've got potential crypto-political synergy brewing in the U.S., institutional validation in Europe. Things are really heating up.
They are. And now let's talk about something that's experiencing some serious growth, real-world asset tokenization. A total value locked of $10.21 billion. That's huge.
I mean, it's massive. And it's important to be clear here. This is different from the total value locked in DeFi, decentralized finance. That's setting at around $97.78 billion. Both are big numbers, but they represent different things.
All right, so we're not talking about your typical DeFi protocols here. We're talking about bringing real-world assets, things like bonds, real estate, onto the blockchain, turning them into digital tokens.
Exactly. And this is where things get really interesting. The leading RWA protocols, according to our sources, are Maker RWA, $1.29 billion locked, BlackRock's BUIDL, $1.23 billion, and Ethena leading the pack with $1.81 billion. Those three alone account for 36% of the total value locked in RWA tokenization.
So BlackRock's involved here too, with their BUIDL. What exactly is that?
BUIDL, it's a tokenized money market fund. Basically, they're taking those traditional money market assets and putting them on the blockchain, turning them into tokens. Could offer some real benefits, increased accessibility, maybe even more efficiency.
So it's not just money market funds, right? There are other real-world assets getting tokenized as well.
Oh, yeah, definitely. We're seeing a lot of activity with tokenized treasury bonds and stablecoins. Athena's USDtb, for example, it's seen 1,000% increase in total value locked just in the last month. That's huge.
That kind of growth is hard to ignore. What are the predictions for the future of RWA tokenization?
Well, there's this Decrypt article. It suggests that the total value locked in real-world assets could hit $50 billion by 2025. That would be quite a jump from where we are now.
It would be. And all this raises some important questions, like, can RWA tokenization really work on those open blockchains, the public ones where anyone can participate? Or do we need permission blockchains, the ones that require authorization, maybe offer more control, more compliance? And what about sanctioned individuals? Can they participate? These are complex issues that will really shape the future of this whole sector.
Absolutely. It's all about striking a balance, isn't it? Accessibility versus security, innovation versus compliance. We'll have to see how those tensions play out.
For sure. Okay, let's move from global trends to something a bit more local, a specific regulatory development. Kentucky seems to be taking a pretty positive stance on self-custody, at least when it comes to Bitcoin and Ethereum.
Yeah, they've passed this House Bill 709, and it's a pretty big deal. It protects the right of Kentucky residents to self-custody their Bitcoin and Ethereum. And what's interesting is this bill was signed by Governor Andy Beshear, who's a Democrat. So it seems like there's bipartisan support for this idea.
So what does this law actually do? What kind of protections does it provide?
Well, for one, it stops local governments from imposing any kind of discriminatory regulations on crypto mining operations. It also makes it very clear that any rewards you earn from mining or staking, they're not considered securities. That's huge for clarity. It removes some of the regulatory uncertainty that's been hanging over this space.
It goes even further than that, right?
It does. It exempts blockchain node operations and staking from money transmitter laws. That's a crucial distinction. It recognizes that blockchain technology is different and it needs different rules.
So Kentucky's making it clear that they're open for crypto business.
It seems that way, and they're not stopping there. They're also looking at investing state reserves in digital assets. There's this House Bill 376. It's under review right now. And if it passes, it would allow Kentucky to put up to 10% of its excess reserves into digital assets with a market cap of over $750 billion. Now, right now, Bitcoin is the only one that fits that bill. Ethereum's not quite there yet.
So potentially, Kentucky could be putting a significant chunk of its state funds into Bitcoin. That's a pretty strong vote of confidence.
It is, and they're not alone.
Yeah.
19 states across the U.S. are considering holding Bitcoin in their reserves. Utah's already approved a 5% allocation for digital assets, and New Mexico is proposing a similar 5% reserve specifically for Bitcoin. Now, some states have rejected the idea, places like Montana, North Dakota, Wyoming, Pennsylvania. So it's a mixed bag, but the conversation is happening.
It is. It's definitely a sign of the times. Okay, let's jump over to the Middle East now, specifically Abu Dhabi. They formed this really interesting alliance with Chainlink, all about setting blockchain standards and best practices on a global scale.
This is a big deal. Abu Dhabi Global Market, or ADGM, they've teamed up with Chainlink to develop global blockchain standards. They even signed a memorandum of understanding focusing on creating compliant frameworks for tokenization.
ADGM, they're really trying to establish themselves as a major hub for blockchain innovation, aren't they?
Absolutely. They want to be a leading international financial center, especially when it comes to blockchain. And this partnership with Chainlink, it's a big step in that direction.
So what's Chainlink bringing to the table? What's their role in this?
Well, they're bringing their technical expertise, their understanding of best practices, and their suite of advanced blockchain services. They're going to help make sure these standards are robust, that they can actually be implemented. The goal is to make blockchain more useful, more practical, while still meeting all the regulatory requirements.
Chainlink, they become a pretty big player in the crypto world, haven't they?
They have. Our source points out that they've facilitated over $19 trillion in transaction value across various blockchain applications. And big financial institutions, they're using Chainlink's services. So their involvement here, it adds a lot of credibility.
And this alliance, it has implications for blockchain regulation on a global scale.
It does. They're pushing for a more consistent, harmonized approach to regulation. They see that as crucial for wider adoption. And as part of this collaboration, they're planning all these educational initiatives, workshops on tokenization frameworks, cross-chain interoperability, which is a fancy way of saying getting different blockchains to talk to each other, and overall blockchain standards. They're even exploring proof of reserves, which is a way for entities to prove they have the assets they claim to have, and other compliance tools.
Interoperability, that's a huge challenge in the blockchain space. Does Chainlink have any specific technology that addresses that?
They do. They've got this thing called CCIP, the Cross-Chain Interoperability Protocol. It's designed to improve connectivity between different blockchains, which is essential for a truly interconnected blockchain ecosystem.
So the big picture here is they want to boost blockchain adoption in the UAE and make ADGM a global leader in blockchain innovation. It's a pretty ambitious plan.
It is. But with ADGM's regulatory framework and Chainlink's technology, they might just pull it off.
Now let's switch gears again and head over to Dubai. The Dubai Press Club. They're doing some interesting things with AI, specifically for media professionals. It's kind of cool to see both AI and blockchain getting so much attention in this region.
It is. The Dubai Press Club, they see that AI is transforming the media landscape, and they're taking steps to make sure media professionals are ready for it. They've been running these upskilling programs, and recently they held a workshop with the Dubai Future Academy all about generative AI in the media industry.
Generative AI, that's the stuff that can create content, right?
Yeah.
Text, images, that kind of thing.
Exactly. And that's what this workshop was all about. It covered AI storytelling, new opportunities in digital media, the future of media in the age of AI, and importantly, practical training with AI tools. They were using tools to generate text, create images, even produce radio content and interactive content using a platform called Generator VR.
It sounds like a very hands-on, practical approach. Get in there and learn by doing.
It was. And the Dubai Press Club, they emphasized their role in helping journalists and media professionals adapt to this digital transformation, especially when it comes to creating Arabic media content. They also had some important discussions about responsible AI use, recognizing its limitations, and the need for ethical guidelines.
And the UAE as a whole seems to be really embracing AI, investing heavily in it.
They are. They want to be a global leader in AI innovation. They're putting their money where their mouth is, and it's paying off. AI is projected to contribute about 13.6% to the UAE's GDP by 2030. That's around $100 billion. And on a regional level, they're leading the way in terms of AI's economic impact. Globally, they're ranked third, just behind China and the US. So this Dubai Press Club initiative, it's not just a one-off, it's part of a much bigger national strategy.
Yeah, they're really going all in on AI. Okay, before we wrap up, let's circle back to the global cryptocurrency market. What's the latest based on our data from March 26th?
Well, the overall sentiment is positive, but there's still a hint of fear in the air if you look at the market sentiment indices. The total 24-hour trading volume was about $77.2 billion, which is actually down a bit, about 6.28% compared to the day before. DeFi, decentralized finance, it's still relatively quiet, $5.46 billion in volume, which is only about 7% of the total. And the total value locked in DeFi protocols, that's sitting at $97.78 billion.
What about decentralized exchanges? How are they doing?
Their market share is still pretty low, only 26.06%. The top dogs are still PancakeSwap, they did $1.49 billion in volume, and Uniswap close behind at $1.43 billion. Then you've got Radium, Orca, and Meteor, but their volumes are much lower, so it seems like most of the trading is still happening on centralized exchanges.
And stablecoins, they're still a big part of the picture,
Oh
right?
yeah, they're huge. $73.05 billion in 24-hour trading volume. That's a big chunk of the total. Tether's USDT is still king, $58.37 billion in volume. Then there's USDC at $9.03 billion and FDUSD at $5.08 billion. Stablecoins, they're the oil that keeps the crypto machine running smoothly.
For sure. Okay, last but not least, let's talk about the big players, Bitcoin and Ethereum. How are they doing?
Well, Bitcoin's market cap is sitting pretty at $1.74 trillion with a dominance of 60.67%. Ethereum, it's at $250 billion with a dominance of 8.70%. And get this, Tether's USDT is actually on track to overtake Ripple's XRP in terms of market cap. Now, for some price action, Bitcoin's trading around $88,245, up a tiny bit in the last 24 hours, but up almost 8% over the past week. Ethereum's at $2,777, down a smidge in the last 24 hours, but up over 10% for the week. Ripple's XRP, it's at $243, down a little bit in the last day, but up over 9% for the week. And for those who are interested in exchange transparency, you can check out diafalama.com, but just a heads up, they don't have data for all the big exchanges like Coinbase and Kraken. So take the reported volumes for Binance, Bitfinex, OKX, Bybit, Robinhood, all those with a grain of salt.
Good point. All right, so to recap, we've seen some big moves from traditional finance into crypto in Europe. Real-world asset tokenization is booming. Kentucky's leading the way on crypto-friendly regulation, and Dubai and Abu Dhabi are becoming global hubs for blockchain and AI. The market itself is looking pretty good, but those tariffs, they're still a wild card.
All this leads to a question for our listeners. With all these changes happening, traditional finance merging with crypto, tokenization taking off, regulations evolving, what do you see as the biggest opportunity or maybe the biggest challenge for everyday people who want to get involved in all this?
That's a great question to ponder. This deep dive is just a snapshot of a very complex, ever-changing landscape. But hopefully it's given you some food for thought. We encourage you to dig deeper into the things that interest you, whether it's tokenization, regulations, or the impact of institutional investment. All the sources we've mentioned, the news outlets, the organizations, they're great places to start your own research. Thanks for joining us.
Until next time.